Hello there, my friends. Chris Marcus here with you on November 20th, 2018 for Arcadia Economics. And a shocker today, I'm making a video. I actually agreed with Jim Cramer on something. As you can see here in an article, he's mentioned, you'll wish you sold at these prices if the Fed hikes rates in November. Key points, investors should sell their stocks now if they expect the Fed to hike. Which Wall Street does expect in December. So does Cramer. And again, I would agree that that's certainly likely. Down here, he mentions if the Fed moves in December, you'll wish you sold at these prices. And again, while usually I do not agree with a lot of what Jim Cramer says, to me, the main reason we're seeing the volatility in the stock market now is that interest rates have finally gone up. So in the same way that years ago in his op-ed to the Washington Post, Ben Bernanke talked about all the great things that were going to happen as the Fed printed a lot of money and inserted that into our money supply, which in some ways it did give the appearance of wealth. You see the stock markets were boosted. I mean, many of them have tripled or more since 2008, although maybe a little less than a triple after the recent couple weeks. Yet, it shouldn't be coming as a surprise, because for the same reason that the asset prices were boosted when the money was being printed, now as the money is being retracted, albeit very, very slowly, you're seeing the exact opposite effect, which is why I've been talking so much about interest rates this year, keeping an eye on the 10-year rate and also what the Fed says they're planning to do, which, again, I'm a little bit surprised they haven't changed their tune yet, because normally once you start seeing any weakness in the market, the Fed is running out front and center with their printing press. So far, that hasn't happened, and they continue to indicate that rates are going to go up, which again means that all of the cash flows that are used to value a stock with a higher discount rate become worth less. You're also increasing the borrowing cost for corporations, even aside from the borrowing cost of the federal debt, which, as interest rates go up, increases quite substantially. So again, amazingly enough, I do agree with Jim Cramer on this one, and certainly whether it's just the December rate hike or even further rate hikes past that, the simplest way I can see it is that the more rates rise, the more likely these bubbles are to pop, and the sooner it is to happen. So hopefully that helps explain a little bit of what's going on today and gives you an idea of what you can prepare for or watch out in the future. As always, leave your comments below. Love hearing those and responding, and I will see you again soon.